Okay. Okay, guys. I think we can start now. It's already 15. Okay, so my name is Shoaib. Anyone has the problem in hearing? Let me know, okay? Everyone can hear me, okay?
All
So,
good.
yeah, okay,
Yeah, we
thanks.
can hear you clear.
So, my name is Shoaib,
Yeah.
Shoaib Najam. So, can you mute yourself? Okay, so I'm trading since 2016. Initially, everyone, I was in loss because I was using some of the companies. I was getting some ticker symbols, and they were giving me the ticker names along with their stop losses and the targets. But anyway, overall, I was in loss. I was using some indicators, but after maybe since couple of years ago, or maybe a little bit more, I'm just using that price action. Okay, with no indicator. I'm using just my own indicator, which has some static levels. Static levels means, oh, I need to record it. So give me a second. So today what I will cover in the price section, because we will be not using any indicator. Okay. So in the price section, we can use static levels like the previous day high, previous day low, or the weekly opening candle, or the opening candle of the day, and the closing candle of the last day. Because why I'm saying the closing candle of the last day, because market opens at 4 a.m. like the stock market, but I usually trade futures, and especially in futures, I'm trading Nasdaq, and sometimes before that I was using S&P 500 ES. So the ticker names are ES, okay, and NQ,
You,
okay.
excuse me, your screen is not shared.
Oh, okay. Oh, Ali bhai, you need to give me the access because you are the host now. Ali
Just a
bhai,
second. Yeah, I'll give you the access. 1 second. Let me just go to share.
allow
You have
all
the
participants.
yeah, you have the access now.
Okay. Okay. Now you guys can see the trading view screen.
Yes.
Okay.
Yes, yes.
So I am trading this Nasdaq. Okay. There are other symbols also like Russell 2000. Okay. And ES, NQ, and there are others. Okay. So I'm just using, or Dow Jones. So I'm using Nasdaq. Nasdaq is really volatile market. So in one go means in uh, in the bearish trend or in the bullish trend, it can run 400, 500 points or maybe 600 points in a day. And each point of the Nasdaq is $20. So suppose if it is running 400 points in a day, so if you get the depth, means if you buy the trade from the bottom, and if the market is running, today was the short day because of the Thanksgiving Friday. So even today, if you see, the market ran almost from the bottom to the top. It ran almost 210 to 200 points, means $4,000. Okay, but we cannot take the bottom or we cannot sell at the high. Okay, that's the issue. But during the trading, what we can do, we can we need to do some risk management. Okay, and during the risk management, we need to see that, okay, what can be the potential buy point. Okay, I'm going with the buy orders only. Okay, the same you can apply for the sell, because the market overall, if you see the market since maybe more than an year, if we see the weekly chart of Nasdaq, if you see the market since 2020, it is just creating the higher high, and later it is creating the lower low, high low. Okay, higher high and high low, then creating the another higher high and then high low. Okay, these are the structures. Structures means what are the potential higher high and then market retrace back. So the retracement is basically high low. So if the market is like, suppose, okay, during the training session today, I will also give you some examples. What I mean, the structure levels, what are the order blocks? Okay, what I will cover today, this is basically I want to cover today. Okay, order blocks, demand and supply zones, liquidity levels, change of character, market structure shift, and these are the short forms. Okay, change in the state of delivery, and is change in the state of delivery. The smart money techniques means which we can do with the correlated tickers or correlated symbols, and how we can do the risk management means we need to take the stop loss. Okay, in any case, if the market is running against us, I will take the stop loss. I want to take the stop loss because I don't want that. Okay, I don't want that. Okay, might be the market will move in my direction. Market will never go in your direction. It's not running on our thinking, on our thoughts, or on our own predictions. Okay, market is running by the smart people, the institutions, banks, and they are running the market. And what they are looking during the market run, they are just looking at your stop losses, the retail trader stop losses. Okay, what are the potential areas where the traders means traders like me and yourself, okay, they are putting the stop loss. So the smart money means the market makers are just looking those stop losses. Okay, so we need to see that, okay, where we need to put the stop loss and where we need to take the profit targets. And moreover, I want to cover the, okay, the targets, and I will share some of the links of my last courses which I did. Okay, but that is not necessary. Okay, so what is my strategy? Okay, so my strategy is this. Can you see this screen?
Yeah.
Okay, so these are the some points which I usually see before getting into the trade. Okay, this is the buy setup, and if you will inverse it, you will see the same setup for the sell. Okay, so in this setup, what initially we need to see that the price comes down in, it should swept out the trend line liquidities. Okay, trend line or low low. So basically liquidities are the levels where the retail traders are keeping their stop losses. And the liquidity levels are basically 4 or 5 levels. What are those levels? Liquidity levels are basically 4 or 5 areas where the retail traders are keeping their stop losses. Okay, what are those levels? The first level is your swing high and swing low level. Major swing high and major swing low. Okay. The second area where the retail traders are keeping their stop losses are the trend line liquidities. Okay, if I will go like this. So over the trend line, below the trend line, and above the trend line. Okay, they will keep the stop losses. Okay. The third area where the retail traders keep their stop losses are the fair value gaps or the internal liquidities. Internal liquidities means, so this is the internal swing. Okay, what are the fair value gaps? Basically, I just said the fair value gaps. Fair value gap is nothing, just the gap in between the first candle. If I'm keeping the first candle as the red candle here. Okay, if I am keeping this red candle first, this is second green candle, the bullish candle. Okay, and this is the third green candle, bullish candle. Color doesn't matter. Please remember this. Color doesn't matter. Okay, so this is your fair value gap, the gap in between the first candle and the third candle. Okay, so this is called the fair value gap. Okay, so these are the trendline liquidities. These are the fair value gaps where the retail traders can keep their stop losses. So if suppose if I will take this trade, buy trade, where I will put the stop loss, I want to keep my stop loss at this place. This will be my stop loss level. Okay, if the price will drop from this level, in any case I need to get out. Okay, or for the safe side, this is also the stop loss area, because this is the major structural level. Major structure and the minor structure is what? This is basically the structure, higher high, then higher low. This is not the higher high because the price didn't break this level, okay? But if I will change it to line chart, you will see it has already broken because the last high was this. Okay, now my new high is this. So this will be my higher high level, okay? So sometimes you need to change from a candle chart to line chart, okay? So now the structure is this one here. And if I will proceed, then you will see that, okay, this is again high low. So what is the high is higher high, and what is the low during the high is basically high low. Okay, so the first alphabet should be H, HH and HL, higher high and higher low. Then again you are getting the higher high. This is higher low, but now you are not getting the higher high. Okay, this is just the high. Now you are getting the low. Okay, and after that what price is doing basically? If I will clear everything, the price is basically, because in my opinion, I am not looking the bullish candle, I'm not looking the engulfing candle, I'm not looking anything. Okay, this is pure bullish candle, but during this bullish momentum, I have a undecided candle. Okay, this is undecided candle, and why this is basically this is an order block. Okay, I said that I will cover this thing. So the first item is order block, demand and supply. So this is a demand zone. Demand zone works for the buy trade, and supply zone works for the sell trade. Okay, so this will be the demand zone, and the top one will be the supply zone. So why this is the demand zone? Because for the demand zone, okay, any low level, like, okay, if I will go from bottom, this is the last candle is your demand zone. Okay, then the structure is completing here. The structure is completing here, and this is low. So again, the low candle will be my demand zone. Okay, but there will be another question. Here you can see another demand zone because the market just took the break, a little break, and then going up. Okay, so this is another demand zone. So you can see many demand zones in one trend. Trend is basically there are two types of trend. Okay, the bullish trend and the bearish trend, or the sideway. Okay, so we will not trade during the side market when the market will be going sideways. We want to take the trade either the bottom for the buy, and we want to take the trade from the top for the sell. The problem is this, that okay, how we know that okay, this is the bottom? So for the bottom, for looking at the bottom, we need to see that okay, if the price is in our point of interest area, point of interest is what? This is 2 minutes chart. The point of interest, we need to go a little bit higher time frame, and we need to see backward. We need to see backward. Okay, what we need to see that any liquidity sweep is taken. What is liquidity sweep? I told you three areas. One area is major swing high. I can mark again. Okay, the major swing high, low, and major swing high are the liquidity levels. The trend line below and above the trend line will be liquidity levels. Okay, below and above the internal swing levels will be the liquidity internal swing low or internal swing high. And the third area, the fourth area, so first area is swing high, major swing low, major swing high. Second one is trend line. Third one is internal levels. And the fourth area where we can find the stop losses are the fair value gaps. Okay, so these four areas you can find above or below. Okay, for the buy, obviously the stop losses will be at the bottom. So this will be my liquidity level. What is the liquidity level? Basically the stop loss. Okay, so I want to put my stop loss below this level if I am getting into the buy trade. Because what the price can do, the price can go a little bit to the top side, to the bullish, and then it can hit my stop loss, and then we think, oh, my stop loss was there. That's why the market was just taking my stop loss. Market is not looking like, miss, we are not even the ants in front of the market. Okay. So we think that, okay, the market was just looking my stop loss and now the market is going up. No, market is not looking like this. Okay. So what we need to see, okay, this was the time. Also the time is really important. Okay. If I see Nasdaq today's chart, this was 850 candle. This is all 5 minutes candle. The market created a high. Why I'm saying market created a high and why the market is reversing from this area. Okay. Why this is the potential low, not the 100% low. Okay. So why there was a potential, I'm just clearing out everything. Because if I will go back, the stop losses was here. Okay. And this is my swing low level. So basically this is the liquidity level. Okay. Below this level, stop losses will be present for the stop losses will be placed by retail traders. Okay. So what I did, suppose if I bought, my stop loss was there, market is now coming down, my stop loss hit, and then market runs. Okay. If I will go back a little bit more, I want to see the first item, what? Order block or demand zone. I said that, okay, these are swing levels. We have the demand zone. Okay. We have the demand zone here. We have the demand zone here because all red candles will be my demand zone because the market is going in the bullish direction. Okay. Red or green, whatever. What is the last candle? Okay. I'm just marking the last candle. Okay. If you see the market went up, then this is the red candle is the last candle. So I mark this one. Market went up, then came down. This is the last green candle. Okay. This is the, so here the market went up, then came down. This doji candle is my basically demand zone. Okay. So why the market is reversing from this area? So if I will go back, I want to see any of the POI, point of interest. What is the point of interest here? If I will see the, okay, what is the point of interest? Point of interest is basically that area from where the market can reverse. Okay. So why the market is reversing from this? If I will mark this, like from here to here, if I will go back, why the market is reversing from this area? Okay. This area, this level is the bottommost. Okay. So why this is my demand zone? Why I need to take the trade from this level? Why I cannot take the trade from this level? Because this is also the demand zone. Okay. This is also the demand zone because this is the last candle before the bullish momentum. So why I need to wait for this area? Because if you see, this is 5 minutes. Okay. If I will go in 1 minute here, what the price did? The price created a level, low level, and then price broke that level. So once I was taking the buy trade from here, that was a good area. Okay. The price broke this last level and then break down and came to this level. So this last level is my break of structure. Okay. And everywhere you can see the break of structure. This is also the break of structure. Okay. There is another break of structure here. But after this break of structure, what the market did, if you see all the break of structure, okay, this was the break of structure. The market retraced back. No, the market didn't retrace back. Okay. After this break of structure, the market retraced back. No, retrace back means didn't retrace back above this one. Okay. But once the market broke this one, then market retraced back to this level. Means market retraced more than the last structure. If I will remove these arrows, then you can see the market pull back above this level. Okay. If I will switch to line candle chart, so the market has closed above this last high. So this is basically my market structure shift, MSS, which I have marked here, okay, like MSS. So this is my MSS market structure shift. The last swing breakout, okay. And this is my break of structure. The last structure has been broken by this red candle, and then furthermore by this red candle, and then green candle took the market up. So once you see that from any of the major area, if the market is reversing and the market has retraced back above 88.6%, 61.8%, if okay, this is the Fibonacci tool. So market has gone almost more than 100%, and then it came down for the retest. Okay, so this is the potential area from where you need to take the buy trade. But now we are looking this level. Okay, now the market, I told you that, okay, why the market, okay, where is that area? Okay, I said that why the market didn't recovered from this area. So you can see that this area has so many candles. Okay, it is already testing the area which has already tested. If you see this red doji candle, it went up and then came down. Okay, so this area is almost tested. Okay, almost 45% has already tested. So now if the market is coming down, and this low of the candle will act as the liquidity level, because some of the traders, retail traders, will put their stop losses below this one. Thus, but most of the retail traders will put their stop losses here at this level. This will be the stop losses. Like if I will take the trade, I put my stop loss here. Okay. But once I see this structure shift, market structure shift, why this is market structure shift? I told you that, okay. Okay. So why this is the, why? Okay, so why there is a market shift like this? Because if you see the structures, the market came down like this, lower low, lower high, lower low, lower high, lower low, lower high, then lower low, but this is not lower high, this is high. Okay, so once you get the high, it means now the buyers wants to take the market to the bullish area, bullish level. Okay, so if you see that, okay, this is market shift, market has shifted. Now I just want to take the retest. I will not take the trade until market will not do the retest, at least to the fair value gap. What does it mean by fair value gap? I mean, this is the gap. If you see, this is first candle green, this is second, and this is third candle. So this is your fair value gap. And this is the bullish side fair value gap. What we call the bullish side fair value gap: buy side inefficiency, buy side imbalance, sell side inefficiency. Okay, in short, I can say BC. So this is my BC level. Okay, and during the BC, if you see it is overlapping with the sell side imbalance, sell side inefficiency. If you see, this is the first, suppose if I will consider this as the first candle, red one, this is the second candle, and this is the third one. So there is a gap in between the first candle low or the wick. If you see, this is the low of the first candle, the red one, this candle. Okay, this is the first candle, this is the second candle, and this is the third candle. So the wick and the bodies, or the bodies and the wicks, are not overlapping of the first and third candle. So this is my sell side fair value gap. So this is called CB, sell side imbalance, buy side inefficiency. Or you can just assume fair value gap. Okay, might be it will be too much if you will go with BC or CB. Just consider it, this is the fair value gap. So once the market is retesting, it needs to fill some gap, because this is what, this is market is balancing, because the buyers are, because the market runs in both ways. There will be some sellers, there will be some buyers. If they,
Ibrahim,
yes,
दे दिया उसको
if there will be only buyers,
ये जो
Ali bhai, can you mute? So if there will be only buyers, there will be no sellers, market will not run. Or if there will be only sellers, market will not run. So if you see, the buy side fair value gap is somewhat balanced by sell side fair value gap. So this balancing is called BPR, balance price range. Okay, we have the balance price range, and after the balance price range, market will give you a chance for the entry. Okay, I'm just removing it from where you can take the chance for the entry. You can take the chance, just mark the BC, this gap, or just mark the fair value gap, bullish side fair value gap, and take the entry, buy side entry a little bit above from this level. This will be your buy entry. Okay, from the gap. Because why this is a buy entry? Because the market has swept out this liquidity, the last liquidity. And once the stop loss has been taken out, the market gives you the indication that, okay, it can shift towards the buy side. If you see this type of bullish candle, it means the smart money is injecting. Okay, means the institutions wants to take the trade. Okay, might be today there were no institutions or banks, but we are thinking that, okay, the smart money is injecting. Once you see these type of big candles, okay, like yesterday there was seller. Okay, so this will be your entry, and your exit will be the last major swing low level. This will be your target. Okay, on any day. But for the safe side, what I do, I take the sell trade, means buy trade exit at the supply zone or just below the supply zone, just for the safe side. I take my profit here. Okay, this is my target. Instead of this will be my target. Okay, whatever is my stop loss, for the safe side, your stop loss should be below the structural level. Okay, we are not going that what is the risk to reward ratio right now, but this should be your strategy. Okay, but what the market did, basically, if I want to take the suppose how much extension the market is giving you, so just flip your Fibonacci level and take the exit at 161.8%. Okay, so this, if you can hold the trade, then 150% or 161.8%, these are the golden levels for the Fibonacci. So this should be your target. Okay, but even if you take out the target here and be happy with the trade. So what I told you that, okay, this is your liquidity level. Market needs to take out the major liquidity. Market at the major liquidity level, or the market at the major POI. Okay, this is your major POI. Okay, I will tell you why the market came down up to here. Okay, just give me a second. So after taking out the major liquidity, what the market did, market gives you an indication that, okay, it has a tendency to go up, but at the same time, sellers to try to take the market down. But did they close below this one? Did they close below the last level? No. If you see the line chart, the closing is above the liquidity level, because the closing candle was level this, and now the market is closing here. So it means that, okay, the buyers doesn't want to take the market down. They want to push the market to the upside. Okay, and they did the same. What they did, if I will go in the 1 minute chart, and one more thing, during this, I can tell you that what is this change in the state of delivery. Okay, we see that, okay, we saw the market structure shift. This is your MSS. Anyone in the waiting room? So this is your MSS. Okay. where is your, okay, where is your change of character? Your change of character, if you go in the structure level, if you see, structure is this: lower low, lower high, then there is another. This is not lower low. Lower low is this, because here the market didn't close below this level. This green candle low and this red candle body is almost at the same level. So this is lower low. Then market created another lower high. Then market, this is lower high. Then lower low, then lower high. Then it didn't create lower low. It created a high. Okay. So where is a change of character? Change of character. I can assume this one like this. Give me a second. If I will go in 1 minute chart, it will be clear. So the last structure, the last lower high is your change of character. Okay. The market was coming down like this and went up. Okay. So this is your lower low. This is your lower high. Market didn't create another lower low, just almost at the same level. I'm just considering it at the same level with the wick. Okay. I'm not going with the line chart. Okay. So this is the last structure which has been broken, and now the market is going up. So this level is your change of character towards the bullish side. That's why I put it at the bullish side. You can save it all the default levels, because I don't want to write down. If I want to write down during the trading, I need to write, okay, CH like this. So I've already saved everything here in the templates. Okay. So this is your change of character. Now change of character is there along with the market shift. This is the sentiments that the market wants to go bullish side. Now I just need the retest. Okay. So market did the same. Market did the retest. What the market did? Market take out these liquidities because the stop losses were there, and then went up. So what can be the potential area for the entry in 1 minute? In 1 minute, what is the potential area? I have written here one more thing: CISD, change in the state of delivery. Okay. What is the change in, okay, what is the difference in between change of character, MSS, and CISD? Change of character is the liquidity level. What is the liquidity level? Basically the wick or the body. If the body, suppose there is no wick, then the change of character will be here at the body, because there is no wick. But now we have the wick, so we can mark the change of character here. What is the market structure shift? It is the last major structure before the breakout. And what is the CISD? The last candles which came down. It can be one candle, it can be two candles, it can be three candles. Okay. The last bearish candles, the continuous bearish candle which came down. Like if I will go with 5 minutes, where is the last candle which came down? This is the last candle. So the body, okay, not the wick. There is no wick in this candle. So the body is basically my CISD. Okay. CISD only, not macro. Change in the state of delivery. Okay. So this is my change in the state of delivery. So where is this one? So the last continuous candle or last candle.
डॉक्टर ने बोला कि मैं जैसे काम कर सकती हूँ मॉडिफिकेशन के साथ, तो मॉडिफाई मेरे फ्लोर वाले करते हैं कि नहीं वो नहीं पता है.
Sorry. Sorry. Is there any question?
I think no, she was not talking to you. She was talking to someone else.
Okay. So okay. So there is a minor difference in between change of character and the CISD. Okay. But if you see here, like in the last one, in 1 minute, my CISD is this. Okay. But where is my change of character? Because this is the last lower low then lower high, and then lower low, and then high. If you see, the market shifted here. So right now my market shift and change of character is at the same place. Okay. But my CISD is here. So there is another potential level from where we can look for the buy trade or sell trade. If you will just inverse it, like for the inverse, just press Alter I. Okay. So the chart will inverse. So what can be the another potential level? You need to look for the any fair value gap or any demand zone in this area near to CISD area. Okay. So like here, if I will go with the demand zone, what is the valid demand zone? Okay, demand zone is this. Okay, I can mark it. This doji candle is my demand zone. Number one. Another demand zone. Okay, this is a same swing because the market didn't create any major low. This doji candle is my demand zone. No, not this one. Sorry. This red doji candle, this middle one. The middle one is my demand zone. Why this is my demand zone? Why the last candle here is not my demand zone? Okay, because I told you that the last candle before the reversal is my demand zone. But this is not a valid demand zone. This is the valid demand zone. Why? For the validity of the demand zone, if you have the structure like this, and your demand zone, suppose if I'm saying that this is your demand zone and this is your demand zone, and then you have another structure like this. Okay, so I can say that, okay, there is another demand zone here and another one here, the last candle. Okay, suppose I'm just giving you the example. So this is my demand zone because it is breaking the structure. Okay, this is a structure level, higher high, then higher low, then higher high. So from once the price will be reaching here, the price is going like this. Okay, once the price broke this structure and closed above, then this is my valid demand zone. This is also the valid demand zone. So I can mark this one as the demand zone because this is valid one. This candle, suppose there is no low here, high low. Okay, this is the continuous trend. I will give you the example. So this is your break-off structure. So this is another valid demand zone. Yes. So once the market created a high, once the market created a push from here, did it able to break this structure? Yes or no? This demand zone able to break this structure? No. Yes or no?
No.
Yeah, not the first time.
No, not the first time. Yes. But this push able to break this structure. So this will be my valid demand zone. Okay. Now my high is this. And again, the market broke the structure, that there will be another valid demand zone. Okay. But this is not a valid demand zone. Okay. Market will come, retest demand zone, and then go up. Okay. The same thing. The same thing, if you see here, what happened? If in normal condition, if I will mark the demand zone, my last candle is basically the red one. What I will do, I will extend it. I will mark the demand zone. Okay. What the market did? Okay. I'm breaking this one. This is 1 minute chart, okay? Now, if you see the line chart, the market able to break from this level, not from this level, okay? If you see, this candle is this one. The wick candle, if you see this candle, I mark it, okay? Like here. This candle is this one. So market not able to break from this candle, but because of this, if you see, because of this candle, this green candle, because this green candle wick was lower than this red candle. Now the market is going up and broke this level. But if you see, this is 31 minute chart, okay? But if you see, the market created another low in between this. The market went up, then down, then went up, broke this level, then went down, okay? So if you see this doji candle, there is another demand zone within the demand zone. Why? See here. This is 1 minute chart. Just for the clarification, I am going in 30 seconds chart. Okay. Now it is clear. The market created a high, not able to break this structure. Okay. Then low. Then high. So what I told you that doji candle, which is now this one, because that was 1 minute chart, this is 30-second chart. This is basically your demand zone, which is breaking the level. Okay. But this demand zone low and this demand zone low is almost at the same level. Okay. We are just 5 points difference. Okay. So just for the safe side, because the candle of this body is not closing above this. But if I will switch back to 1 minute, now you can see that the body or the candle wick of this doji candle, I want to say, this doji candle is basically your valid demand zone, because the market created a push from here, because this push ended up here, then market came down. So what is the real push? Who was the culprit? Who was basically the culprit guy or the culprit candle who pushed and the line broke? Basically this doji candle. And usually what I mark in my charts, I only go with the two candles. One is which has more than 50% of the body filled. That is my bullish candle or bearish candle, whatever. And the second candle which I look in the market is basically undecided candle. Undecided candle is also this one, because the body is less than 50% of the whole candle. This is also undecided candle. But this undecided candle is not valid for me because it is not at the POI area, point of interest. My point of interest is basically the reversal area. Okay. So what are the valid demand zone and invalid demand zone? I told you that, okay, valid demand zone are basically those demand zone which break the structure. And plus there is another flavor in the demand zone. If the demand zone is created along with the fair value gap, okay, if the demand zone is created with the fair value gap, what does it mean? Suppose if the market was going up, okay, their demand zones are created here. Here is the demand zone. Here is another demand zone, then valid demand zone. So just above the demand zone, you should have fair value gap. For the validity, one is basically that the demand zone or the candles break out this structure. And the second thing, if you have the fair value gap, then it is more powerful. Okay. Why? Because I told you the fair value gap is also the liquidity levels. The fourth item or third item, I told you that what are the liquidity levels? The major swing high, major swing low, the trend line liquidities, the internal liquidities, which you have the internal swing lows, internal swing high, and the fair value gaps. Okay. So you need to look for the liquidities, because market always run for two things: liquidity and fair value gaps. market will fill the liquidity, then it will go for fair value gap. Then again it will go for liquidities. Because if they will not fill, basically liquidity is the fuel for the market. So what I was telling you initially that, okay, market, why the market came here? If you see 5-minute chart, this is your demand zone. Okay. See what it did. If I will mark the structure, this is your low, high, then yeah, low, high, low, and then high. Okay. So market is basically breaking this structure, market shift. Now the market has gone up. Okay. Let it go. Don't run behind the market. Okay. If you didn't enter here, okay, leave it. Or you can enter at the second leg, but what will be your stop loss? If you will enter here, suppose at the second leg, anywhere here, if this is your entry, buy entry, your stop loss should be below this structure. Try to take the stop losses. Otherwise, if you will not take the stop loss, market will run down here. Then you will say, oh, market has broken the structure. Now I can get out. But what the market is doing? Market is basically eating the major swing level, this level. Why? I tell you. And the market came down. Now you have already got out because now you are scared that, okay, market will drop more. Where the market will go? Oh, market can go up to this level. This is another liquidity level. Okay, so I don't want to take that much loss. You got out. But at the same time, market run away from you. Because you are not looking the liquidities and the structure levels. Okay. What the market did? If I will go back, if you see the levels, the structure, just mark the structure again. Okay. I'm marking for you. The market created a high, then low. Bodies. Okay. Bodies are almost here. Then created another low, almost double top. Then swept out this liquidity. Now it will go for this is your sell side liquidity. Okay. This liquidity, the bottom side liquidity is your sell side liquidity. Okay. And the top one is your buy side liquidity. Okay. So now what our structure is saying, the market went up, then came down, then broke the structure. Okay. The buy side liquidity is basically your what? Market shift. Okay. Now the market has shifted with this level. Okay. And if you consider it as the demand zone, suppose if you have the tendency to take big demand zone, then what you can do, you can mark your demand zone from bottom to the breakout. Okay. But this will be too much big. From 769 to 834, almost 65 points. 65 points multiplied by 20 is basically $1,300. Okay, so you don't want to take that much big demand zone. Okay, but if you are taking the position like on weekly chart, on daily chart, or 4-hour chart, then you can take this much. Yes. Okay, so what happened? Which level basically broke the structure? If you mark the level, this was your structure, the last, and this level has broken down with the fair value gap. This is your fair value gap. So these candles broke this structure. So just mark these candles and extend it. Okay. Sorry. And now I can mark it as the valid demand zone. Why valid demand zone? Because this was the culprit candles. Culprit, why I'm saying culprit? Because they pushed the market. They pushed the line. Okay. Suppose if we are in line, 20 people are in the line and we are just standing over the edge. So if the last one will push, so everyone will be Okay, whatever will happen. So this is the culprit candles. And these candles basically broke the structure. This is the internal structure. If I will go with the extension structure, it's extended structure. So this candle was there. This is also broken. So now you understand why the market came down up to here. Because it came in the demand zone. Just delete this one. Okay. It came in the demand zone. What is my valid demand zone? Valid demand zone means that those candles or that single candle that broke the structure. Now I want to mark the single candle. What was that candle? Can anyone tell me? This was the candle who broke the structure? Okay, now one by one, I'm just asking. This was the candle who broke the structure? Yes, no? Hello? Yes, no?
No.
No.
Okay, give me a second. Get yourself coffee, tea, and water. Why? Samosas and pakoras. I have taken samosa already, Ali bhai. In the invitation menu, click.
Good for you.
Yeah, I've already taken my
That's
tea.
good.
My tea is there. Okay. Okay. So this. Okay. Okay. I was asking that.
Okay,
Okay.
one second, guys. One second, Suresh. Guys, I'm putting everybody on mute. So if you want to speak, you unmute
No,
yourself.
no, no, no. I'm asking the question from everyone.
Okay.
Everyone.
Okay.
Just unmute everyone. Okay.
Okay. Everybody
Now,
on
guys.
mute.
Yeah. Okay. Thank you. Now, guys, excluding myself, there are 62 people. Okay. Good. So out of 1,025, I think. Almost 20%. Less than 20%. Okay. So this is the culprit candle. This one. Okay. I can mark. Let me mark it. Okay. Oh, sorry.
Shobhai, can you hear us?
Yes.
Oh, so I have put a question in the chat. When you were saying that if you draw the structure, you are going out of the breakout zone. So tell us also, when do you make a decision to go into the market?
Okay. Just give me a second, Fran. Right?
Okay, take your time.
Okay. So, okay. Now I have marked 1, 2, 3, 4, 5.
Right.
Just go randomly. Okay. Now, Farhan bhai, tell me which one is the culprit candle?
Culprit is I would say number 2.
Number 2. Okay. What is the reason?
Reason because of the bigger wick on top.
What is the culprit candle? The candle. Okay. In Urdu, I can say जो सबसे पीछे खड़ा हुआ है ना, वही बंदा culprit है, उसी ने धक्का दिया है. ठीक है ना? सबकी वाट लगी उसी वजह से.
I have another reason for culprit candle being number 2, because if I can see number 2 is engulfed in number 1, so I would say okay, because of the green candles engulfed in number 1, the trend is going to continue. So this candle is basically the culprit because it is giving me a fake sense that the trend is going down, but instead number 3 goes up.
Okay. Okay. So I think Yusuf, are you here? Yusuf bhai? Yusuf bhai, can you unmute yourself? Okay. Anyone? Ali bhai, which one is the culprit candle? And this
Number
one.
2.
The candle before 2, I think, because it was going down. Second one is actually turned into
You want to say
not
one?
One. Yes.
Number 1.
Okay. Any other reason? Any other people?
I would
Because
say
this is your demand zone. That culprit candle will be your demand zone.
Number 5, I think.
Who said this?
Me, Amar. It broke the low.
This one?
Yeah, this one, the last one, number 5.
It broke the low.
Previous, it filled this gap, the whole gap.
This gap, which gap? There is no gap here. Which one? The gap is here, yes. This is your gap. Good. Okay. Basically, okay, this candle is most likely will be your demand zone. Why? Because if you see the structure, now I am shifting it to line chart. The market went up, then down, and then in one go, it broke this structure. There is no hiccup. So if I will just remove it, I will just mark this one. I will remove every other thing. Okay. Like, okay, this one. I will just mark this candle. Okay. And I will extend it. Just want to see, in any case, my stop loss will be here. Okay. I can take the entry with the market order. Okay. Once I see this, and once the market is coming down, I can take the entry within this level, within any of the level, but just for our satisfaction, this is your demand zone. Okay. I mark it as the demand zone, extend it. So we want to see that, okay, we were right or wrong. From where the market reversed? From where the market reversed?
Demand zone.
Yes. Okay. And the valid demand zone. Why there are so much difference in between? Okay, demand zone is the last candle. Okay, where is the last candle? Where is the last candle? For the structure. My last candle is here. This big candle. The market came in this zone? No. I was waiting for my entry. I was waiting for my buy entry. Okay, I will put my buy entry here. I will put my stop loss below this structure. Okay, and I was waiting and I was waiting. Okay, so that's why demand zone is not necessary your valid demand zone. You can see many demand zones in one trend, but the valid demand zone, you need to look for the valid demand zone. And if you see the market, okay, now I'm reviewing everything. You can see clearly, okay, which area is basically breaking the structure. Okay, this is my breakout. And what is this? This is another important point. This wick, this wick, this, okay, I can mark it as the black. Yes, black. This wick is not the normal wick, okay? This is what? Did the market tried to break this level. Okay, market push hard. Here, came down, but not able to break. It came down. This is really important level. Okay, if I will remove this level is really important. There is a name of this level. Okay, I have a question for everyone. What we call this level? But the market broke the structure here. This is your market structure shift. Okay, for this shift, if you see, oh, market is going in one way. Okay, this is my demand zone. This is nothing in the 5 minutes, 1 minute candle, but it can impact a lot if you will go with the positional trading. And if you see, this is suppose weekly candle. So you can assume how much will be your stop loss. Okay, that's the point I want to clear. For the positional trading, same setup. You don't need to change anything. Okay, I will tell you where you need to enter and when you need to exit. So you know that, okay, my entry is not at this level. My stop loss will be at this level, below this structure. Yes. I don't want to take my stop loss here because this is 796. If I will put my stop loss here, this is 766, 30 points. 30 points is $600. I don't want to increase my stop loss with $600. If I want to take, suppose $500 profit, then I cannot keep my stop loss at $600. Understand? I need to keep my risk to reward like 1:3, 1:4, at least. If I'm risking $100, at least I need to get $400, $500 at least. And you can get it really easily. Okay. But you can lose also because of undisciplined FOMO. Okay. So I know that, okay, market is breaking because this structure is failed here. This candle, this last red candle didn't able to break the structure. The break of the structure is occurred by this nanny candle, small candle. This is basically what I call खांस, वो खांस जो होती है ना हाथ में जो चुभ जाती है, what we call, ठीक है, खांस होती बड़ी छोटी सी है लेकिन वो पेन बहुत करती है. This is the painful candle, the culprit candle, but this is your entry. Okay, Amar bhai, you know where you need to enter. From the area, the market will break, but can you wait up to this? This was on 27th, 6 o'clock. So you need to wait for your entry on 29th, 9:30. Can you wait? No. So once, suppose if you see the market has broken the structure, what you can do? You need to mark the demand zone. You need to mark the fair value gap and just enter from where the market will try to reverse. Okay. Once the market will come inside the fair value gap, now you can see this fair value gap, even it is not closing below 50%. This is 50% line of the fair value gap. Why this is fair value gap? This is the first candle. This green big candle is the second. This red one is the third candle. So market not able to close below the 50% of this fair value gap. And again, the market, I told you that liquidity levels. If you mark the trend line, the market is breaking with the big gap. Okay. If you didn't able to enter here, again mark the demand zone and the fair value gap. This is your fair value gap, again mark it. If the market will came, and now this you see the rejections because the wicks are the rejections. The market, the sellers try to take the market down, but not able to keep it there. Now it has broken above. And why it is broken above? If you see, again, there is a structure breakout. Okay. The same thing happened again and again. Now, again, the structure has been broken. And which candle broke this structure? This green candle. Just mark it as the demand zone. You will get the entry again. And the same thing will happen again and again. Sometimes the demand zone will not fill. Okay, let it go. At least 1, 2, how many chances you got? 1, 2, 3, 4. 4 chances you got. Enter at any place. Okay. And stop loss should be just below not below the main structure level. Suppose if you enter here, now your structure is this because this is the last low level or this is the last low level. Just put your stop loss here. If you have entered, somewhere here or above over this fair value gap, then your stop loss will be below this structure. Take the stop loss. Instead of taking it, the stop loss up to here, main structure level, take the small loss. Okay. Because we are trading and we usually what happens, because there is a FOMO if the market will not run against us. So if I'm keeping 10 points stop loss in NASDAQ, 10 points stop loss just hit, $200 gone. Okay. 4 or 5 times stop loss hit. If you see here, how many times market testing? 1 time, then again came down 2, then again came down 3. So if any of this area like 3 times stop loss hit, $600 will be gone. Because 10 points of NASDAQ is $200. Okay. So in the same way, so you got the entry. You got the entry in 5 minutes. You need to go in the high time frame, like 15 minutes, and see where is your liquidity level. Okay. So we got the entry here at this demand zone. Where is your liquidity level? On the left side, your liquidity level, the internal liquidity levels, the first internal liquidity level is this. Because this is the major swing. You need to check out the trade here. This should be your target 1. The next liquidity level will be your target 2. Okay, wait. Or where is this? Okay, left side. Okay. This should be your target too. Okay. And this is almost double top. If you see triple top almost. Okay. In this market, 3 or 4 or 5 points is not nothing. Okay. So what you can mark it as the supply zone because the market is reversing from. So your last target should be this. There is another supply zone here. Okay. So your third area of target should be this one. Okay, bottom. So what the market did today? Market just hit your target 1 and target 2. Okay. So don't take the, suppose like in this type of structure, if you see if the market went up, then came down, then again down. So what you can do, you instead of taking the highs as the target, what you can do, just mark on the left side, they should be high. Just mark the body. Okay. And take the profit at this level. Because sometimes what happened, if this was the high, if you see this was the high, market didn't touch that high. And now it is rejecting. Okay. So you were not able to take that. Suppose if you are not in the system, you just place the trade and your target is high this one. So you will not be able to take out the profit. Okay. So just take out the profit, near profit, and then enter again. But that is my mistake. I'm not doing the same thing nowadays. Okay. So you got the entry, you got the exit. Even if you got out here at this level, how many points you are getting with the stop? Where is your stop loss? Now your stop loss is this. You got the entry in 1 minute. Okay. Why there was another thing for the entry? If I told you CISD, this was your CISD. Okay. So if you enter here or if you enter here, your target should be the internal target. Okay. What was the target? If you enter here at the top of demand zone, so this should be 128 points. Suppose 125 points is 100 points is $2,000 and 125 is $2,500. Okay, with the risk of 6.5 means only $130. Okay, so okay, this is okay ridiculous. 1:20, but this is the setup, and you can see the same setup in sell side. Okay. So any other thing is remaining, like order blocks, basically demand and supply zone. I told you what is the valid demand zone and supply zone. So we have covered this. Okay, liquidity levels, I told you at the 4 levels. Change of character, I told you the first reversal from the trend. The first reversal from the trend is basically is what? The price was coming down, lower, low, lower, high, lower, high. Now it has been broken. So this is a change of character. Okay. Change in the state of delivery is the last. Okay. If you have continuous red candles, the last continuous candle body, not the top. If you see the top, this is your change of character. Okay. This is a change of character. This is your change in the state of delivery. Okay. So you can also take the entry at the CISD level. If you see that, okay, the market, suppose if I will go 30 seconds, you need to see some type of gaps here at this level. Okay. Just over the CISD, you can see the gap. Sometimes I also trade on 15 seconds just to see the clear direction. If you see, okay, what you can see here, you see that the market has retraced back more than 61.8%. The market has retraced almost 78%. Okay. So now if the market means the buyers are giving you the indication that, okay, we have the tendency to take the market up. So next, what you will do? You need to mark the demand zone. Okay. The last candle, because the market still didn't break the structure. So the last candle is your demand zone. Just mark the demand zone. And market is respecting your demand zone. What does it mean by respecting? Market is not closing below the 50% of the demand zone. And why this is candle is demand zone? Because it is also creating a fair value gap. Okay. Even if you enter here at this demand zone, okay, don't look anything. Like if you don't want to see here. So what is this basically? If you see, the market has broken this structure. This is your market shift. Okay. And this candle is broken the structure. But this, oh, sorry, this is break of structure because it is in the same direction. Sorry. The market has shifted in this way. The market is basically shifting here. This is the major structure because the market created a lower low, then lower high, then lower low. Now the market didn't create any lower low. Okay, and now the market is creating the fair value gap. So this is what the bearish side fair value gap is overlapping with the bullish side fair value gap. So this is your BPR, balance price range. Okay, so bullish side fair value gap is BC, BISI. Buy side imbalance, sell side inefficiency, and the selling side inefficiency or fair value gap is BC. So this is your BC. So I told you if you have this type of stuff, so just enter with the BPR. If you are missing the trade, if you don't able to enter it, just enter here. And once the market, if you see the big candles, don't afraid from big candles because you know now the reversal will come. Because now the smart money is injecting and soon we will see the reversal. Suppose if I open, suppose Bitcoin, okay, like, okay, weekly chart, okay. Now it is almost at 98,000, whatever, 97,000. If you see for the positional trading, I'm just telling you, okay, how you can take the positions. Cannot see the screen? Who cannot see the screen? Everyone can see the screen?
Yes, we can see the
Yeah.
screen.
Yeah,
We can see the screen.
Yeah, everything is fine with the screen. I don't see any problem.
Shyam is saying that.
No, there's somebody,
Sorry,
Fahad Khan is saying can't see the screen. Fahad, it could be a problem at your end.
We can see the screen.
Okay,
Yeah, you have to see it in the view there and keep it standard.
Meeting
Are you
was
still
disconnected,
using
right,
the
for
screen?
a few minutes? Yeah, I cannot see it. I was on my phone, but now I can see it.
Okay,
Okay, thank you,
great.
boss.
Thanks.
Okay, if anyone
Meeting was
has
disconnected,
any
right, for a few
issue-
minutes?
yeah, if anyone has the issue or any question, just interrupt me in the middle. Okay, don't wait for the end. Okay, just interrupt me right away. So if we will see we want to see our setup. Okay, so our setup is what? We want to see the lower level from where the market, this is weekly, or if I will go with monthly. Okay, suppose. Now, wanted to take the position. Okay, remember the demand zone and the fair value gap. Okay. So you see the market shifted here. When? In 2019. So this was your market shift. And what happened during the market shift? Once the market shifted, it created a big gap. Okay. Suppose we were looking that, okay, market will come down. Where market will come down? Market will come down because this was the break of structure. So market will come down to this level. This demand zone, this is the valid demand zone. Because just after this candle, we have a fair value gap here. And market not able to break the structure with this candle. If you see, this candle created the push. But did it able to break the structure? The structure was here, market shift was here. It closed here. So my demand zone is not this candle. Understand what I want to say? I need the closing above this level, above this structure. Did this candle able to break the structure? Guys,
No.
No,
Because
did not.
it didn't give the closing.
yes. Now come to the weekly chart. Okay. Now see, okay. Where is that one? The structure is broken. Now, if you see this should be my demand zone. These red candles, okay? Because these candle created the push and broke the structure, okay? There is no red candle in between, okay? This is weekly. Might be we need to go a little bit more down, okay? Okay, why the market came down? So the golden area is your 60 below 61.8%. If you first mark, because we need the discounted price, we want to enter in the market at the discounted level, okay, not at the premium level, okay. For the buy, you need to you should need to be in the discounted zone. Suppose if you see that, okay, there are some demand zones because these are the undecided candles, and this undecided candle is basically able to break this structure. If you see the internal structure with the fair value gap, if you see this internal structure has been broken with the fair value gap, and we are below 50% of the level. So anywhere in this area, we want to see the reversal. Okay, we are waiting for the reversal. The price was dipping down. Okay, we are in the sell side delivery, or towards the south side. Okay, bearish south sell side delivery are all same. Okay, it means we were in the bearish trend. So what we were looking for any valid demand zone. Okay, now there is another thing. Now the market means we can see the chart, so I'm just marking as per the chart. Okay, this is another thing, but I want to see that what happened in this area, why the market reversed from this event. First, it was in the discounted zone. Second, what happened? Okay, if I'm not able to take the perfect entry in that from the demand zone, can I take the entry over the reversal? Yes. Okay, I want to see the reversal. If you see, this was the market shift. Right or wrong? Yes.
Correct.
Because if I will draw the structure from here, this is your low, then lower high, then here it didn't create the low, but the body of this candle is here and the body of this red candle is here. So I am assuming this is low. Okay, then this is lower high, this is lower low. Market created a push and broke. Okay, so this is the last structure. This is the last change of character. Right now we have the same market structure shift. So market broke this structure. Second thing, did it able to created a push near to above 61.8%? My last structure is this and my low is this. So if I open the Fibonacci level, it came almost 88.6% of the level. Okay, from where? From a valid POI, because we marked this fair value gap in the monthly chart. Okay, this was the monthly chart and this was the fair value gap. So we were in the valid POI. Okay, why valid POI? Because now I marked the zero level of the Fibonacci from here, but there is a mistake. I needed to mark from here. Why I needed to mark from here? Because this level created the big push and market broke the structure. Okay, but anyway, so I'm looking for the reversal trade and I am in the weekly chart. So what I will do, okay, market has been shifted and Fibonacci is showing me that, okay, the price almost reversed 88.6% or even almost 100%. So this is your double top. Double top is another strong level of liquidity. Okay. Double top, double bottom, triple bottom, whatever. So if you see these type of big candles, I told you that a smart money is injecting. Okay, but another thing is this. I think in the previous chart, I marked a black line and I forgot to tell you that what was that line. So basically market came here and then it tried to push upside, but not able to go above. This was your break of structure, the last break of structure. So this last break of structure is towards the bottom side. Okay. So this last break of structure is basically another name. This is your inducement. Okay. Once the market is trying to push above, we think that, okay, I think this was the last structure and now the market will push above because the market has already given me some indication. If you see that this, if you see this from the last structure, the market didn't able to push above 61.8%. It just retraced 50%. So I know that, okay, it is not able to close even above 50%. Now the market is not going above. At least I need closing above 50% or 61.8%. Now I need to mark the second structure. Now I see the market is closing, giving me the closing at 88.6%. Why closing? Because if you see, these wicks, these bodies are closing here. Okay, this is the level. Okay, now the buyers are giving me some indication. Another thing, at the same level, I have the CB, means the sell side imbalance, fair value gap in the selling sides, and I also have the BC. There is another indication that the buyers are in power. And both, if I will merge both these things, this is your BPR. Okay, BPR is basically a little bit different, but I'm just assuming. So what you need to do at the main POI, at the main level, it is not the demand zone. It is basically the fair value gap. But I will show you that in weekly it is not the demand zone, but in lower time frame, like in 4 hours or in daily, it can be a demand zone. Okay. So if you see, this is your inducement. This is your smart money injection, or the banks and institutes are entering. Why? Because they are eating the stop loss here. They are eating the stop loss here. This is low. Everywhere we have the stop loss because it seems that this was the valid demand zone because it broke the structure. So if I mark this demand zone, what I will do, I will put my stop loss below this demand zone. Okay, my stop loss suppose was there. But what the market makers did, they ate my stop loss. Now they are going in my direction. Okay. Okay. Take the stop loss. Now look for entry. Entry is there because you have the sell side imbalance, you have the buy side imbalance. The market, the Fibonacci is showing you that, okay, it has almost retraced 88.6%, which is a good indication. Okay, and if you go with the, I don't know if you will find anywhere, but if you will go with the box order blocks, I can say I will show you that why it is the valid zone. So now you got the entry from this demand zone. Your stop loss will be below this structure now. Okay, below this candle. Okay, now what you need to do, you need to come in the monthly chart. Your entry is here. No, sorry. Your entry is here, BPR. Now your exit should be, I'm removing this. Okay. And also this one. So what I told you, you can take out the exit or profit from on the left hand side. You should have one body candle closing or opening. You can take the profit here. This should be your first profit. You know the entry, you know the exit, and this is your internal liquidities. So you can also take some profit here. Okay, but you see the market went up, didn't able to close above, just give you a wick and then came down. But these were so many dollars, 48,900 to 38, almost $10,000 in Bitcoin. Where the market is going, okay, what you need to do, you need to see the extension at least to 150% or 161.8%. Okay, market has already extended 150%. So it is going almost $101,000. Then it will give you, because it came down to fill this gap. This is already creating a gap, big gap. Okay, once the second candle will start, then it will be a gap. Okay, so in this way, you can find the trade. Okay, what I was telling you might be in the lower time frame. I will show you that there will be a demand zone. Okay, I will show you. I'm trying to show you. Might be we'll see. This is monthly. Where is the weekly? This is weekly. Okay, so just remove everything from here. And I am shifting it to daily. Here. Okay. Which this structure is broken by this one. This is your market shift. No, this is your break of structure because it is in the same direction. Market shift only occur at the reversal area. Where is the reversal area? Your reversal area was here. So this is your market shift. In the same direction, you can have break of structures. Okay, so you will find market shift and change of character only once. So this is your change of character from lower low and then lower high. The last lower high is this. This is your shift. Or you can assume, okay, if this is the major structure shift, okay, this is your major structure shift. And after that, you got the trade. So, but here, if you see the break of structure is here. So this break of structure is occurred by which candle? Basically this doji candle and this big candle. So the low of the candle is this one. So I can mark the demand zone as the full body and I can extend it just to see if we are right or wrong. Okay, now I can go to further it. No, market has already given you some more down. Okay, because but because market broke this structure and then I think it is taking out this demand zone. Okay, anyway, so if I will go on this chart, which I showed you initially, so you can see that this is the same chart. This is your demand zone. Above the demand zone, you have the fair value gap. Okay, the market went up. Now it is coming down. So this is your last structure which has been broken, which I marked as the 4 or 8. What is 4? Basically, the price should liquidate the last break of the structure, which is your inducement, and enter into the POI. POI means the major area from where you are looking for the reversal. Price also need to close at least 61.8%. So I marked that, okay, once we were taking the trade, if you see that, okay, the reversal is above 61.8% or like here, if you see the market has reversed at least 61.8%, then you can look for the entry. Okay, entry is from where? Entry is from your sell side imbalance and VPR. Okay, I think it is too much for you guys if you never trade with the price section. I have the indicator, okay, this one, okay, but I don't use it. Okay, why? Okay, when I use it, I only use it for the static levels, for the daily trade. Okay, suppose if I will go in 5 minutes, and if I will see the today chart, so basically I coded it for futures only. Okay, for NASDAQ and for whatever I'm trading, like ES, I coded it for this one. Why? Because it is giving me the weekly opening price. It is giving me the, okay, let me remove something so it will be easy. Okay. First, what it is giving me? It is giving me the opening range. I can change the opening range by means from here. So I want the 930 to 935 opening candle. So if you see that, okay, these levels are, you can find separate indicators in TradingView, okay, but I merged everything in one indicator. So if you see, this is your 930 candle, the high and the low, whatever the range of 930 and 935 is this. Okay. After 935, you can also play with the range. Okay. After 935, what you saw? That the market retraced back almost 111%. Okay. Okay. Well, if it has retraced back 111%, so what happened? This was your market structure. And this was the candle. Okay, I think we have already seen this one. Okay, this was the candle which created the push. So this was the valid demand. Okay, so this indicator is showing me the, okay, these are the opening range. What else we have? We have like the high of the previous day low, opening day means market opens at 6 o'clock, the futures market 6 p.m. So, and weekly opening London open. So anyway, I don't recommend. You can use whatever indicator you like. Okay, but it is giving me sometimes good trades, but I'm not using it. Okay, these are some sort of moving averages, you can say, but I change a little bit. Okay, and beside that, I added bar color. So if I will get this lime color candle, it means the buyers are more. Okay, and over above this level, I can take the buy after this lime color candle, and I can keep it until I will not get the blue candles, continuous blue candles. Okay, so this is the thing, because I need to finish it. Aliva is waiting. And one more thing, try to learn Fibonacci. Okay, Fibonacci retracement is really good, not indicator. Basically, you need to mark by yourself. Indicator is basically automatic. You can just press the button and it will show you many things. But for the Fibonacci, you need to see the structure. Okay, my theory is this, that okay, if the price is coming back inside the valid demand zone or in the retracement area. Retracement is basically what? In below 50% for the buy. Okay, so if the price is coming here and then retesting, okay, why retesting? Okay, if it is not retesting, what is there? Why I need to take the trade? Okay, in 1 minute I cannot able to see anything major thing. So what I'm doing, I'm shifting it to 30 seconds. Okay, in 30 seconds, can I see something? Yes, I can see the inducement here, which is basically the stop losses. Buyers put the stop losses here. Okay. Any other thing which I can see? Yes, it is inside the discounted zone. Any other thing? There is another low. If you see this low and this low is almost same. So this is another liquidity level. Okay. And after that, what happened? Price came down. Price went above this structure, internal structure. Even the price went above this structure. Okay. So this was the valid demand zone. No, this was not the valid demand zone, because price not able to break this structure. So this is not valid demand zone. Okay. Where is the valid demand zone? If you see, the market broke the structure from here. Even this demand zone means, I want to say this demand zone. Even this demand zone is above this demand zone, but this is not valid because it not able to break the structure. Even this demand zone not able to break this structure because the price reached here. Yes, this red candle able to break the structure. Okay, but you see the price went down. This is your change of character. Price created the change of character, retested, and then came down. Okay, so now we are looking for the valid demand zone. So where is the valid demand zone? The price is breaking here. Okay, this is 30 seconds. If I will switch to 1 minute, everything I think all the candles will be green. You see, all the candles are green. So where is your valid demand zone? Go back again in 30 seconds and see what was the last candle. Okay, so your last candle is this one, red one. Just mark it as the demand zone. Okay, now you need to take the trade from here, not from here, not from here. Okay, just take the trade and your target should be again for safe side, extend this one, take out the target here, because if you see the price just reached here and then came down. Okay, another thing. Okay, this I think that will be the last topic. So I told you risk management when you need to put the stop loss in the targets. Okay, one more thing, SMT. Just give me 5 more minutes. What is SMT? Smart money technique. Okay, so for a smart money technique, SMT divergence, you need to have correlated pairs. Correlated pairs means Nasdaq correlated pairs is ES, S&P 500 futures. Okay, like Euro USD, I think British pound, and like BTC and Ethereum. Okay, so BTC and Ethereum are the correlated pairs. Okay, so we can take the example. Okay, from BTC. I want to show you just the SMT. What is SMT divergence? And we will see any time frame, like in the bigger time frame, suppose 2 hours. Okay. Oh, yeah. And you need to look for the SMT near to the point of interest, near to the reversal area. Okay, not any other area, just at the reversal areas. Okay, sometimes you find the SMT, and that usually those trades are really great. Okay, if you don't find the SMT, okay, just change the time frame, because sometimes time frame, if you change the time frame, you can find the SMT. What is SMT? Basically, one symbol or one asset is going in the bullish direction, and at the same time the other one comes in the bearish direction. But if you see here, if you see this level and also see in this area, okay, because you can see the highlighter in this area. So if you see this candle, this is low, and the other candle is also low, and so this is not the divergence, because at the same level this is low, and if I will mark the here, this is low. So this is not the SMT divergence. Okay, now okay, so भाई माइक बंद करके मारो यार. Yeah, here if you see this, Bitcoin is going in the bullish direction, but at the same time, if you see SMT, we can see the divergence in the Ethereum. Okay, at the same time, Bitcoin is going upside, but at the same time, Ethereum is going in the bearish direction. Okay, so in which direction you need to take the trade? You need to go in the high time frame and see where the market trend is there. If the market is in the bullish trend or in the bearish trend. Okay, so now you can shift to, this was not the SMT. Now you need to see that, okay, what was the direction of the high time frame, daily or 4 hour, whatever. Okay, so you got that divergence here. Your target should be liquidity levels, the body of the liquidity level. Okay, so if you take the trade with the SMT here, so your target should be here. So this was almost what, $65,000 level, and this is $73,000 level. Okay, just with the SMT. In the SMT, the pair should run in the opposite direction at some point of interest, POI area. Okay, suppose if I will see here, There is no SMT here. Yes, there is SMT here. Means the divergence. Okay, the Bitcoin was coming down, and at the same time, Ethereum was going up. Okay, right? So in the day trading, like if you are trading with 5 minutes or with 1 minute, you can see the same thing. Miss, let me show you one thing. Like if I go back again to NASDAQ, and the second pair I want to see is S&P 500 means ES. Suppose this was today's chart on 1 minute. And where is your POI area? This is your POI area because the market is reversing from here, and this is your POI area. Okay. So I want to see if we have any divergence. So at the same time, if you see, if I mark this low, and on the right side of the window, you can see ES. So these are the correlated pairs, NASDAQ and ES. The market of the NASDAQ was going down. So this candle, okay. At the same time, if I see ES, okay, I can make it a little bit bigger. At the same time, ES was going up, right? So, and what is going on here? Basically, your valid demand zone. Okay, now you can see what is the valid demand zone. Here, it is just liquidating the last lows. And after liquidating the last levels, what it did, it is giving you, because if you see these big red candles, it means now you can see the reversal very soon. Okay, these red candles, now we can see the reversal very soon. Okay, you have inducement here. Okay, you have valid demand zone, you have inducement, you have liquidity levels, and one more thing, this, oh sorry, this, the price is also in the discounted zone, almost at the 88.6% or almost at the reverse 100%. Did it give you the shift? Yes, it has already shifted. Okay, so this was the valid demand zone for the shift. Okay, not the bottom one. But market just retraced back because it was liquidating this level. Okay, not liquidating, sorry, the last demand zone. Sorry, not liquidating. Okay, and here if you see the valid demand zone, because this candle created the push. So this was the valid demand zone. If you see the market not able to break below this level, this demand zone. If you see in the line chart, it is still in the demand zone, just liquidating this level. And what was the liquidating level? We saw before that, okay, it was liquidating the previous levels from where we took the demand zone. Okay, even from, if you even look by only looking this small 1 minute time frame, you can take the trade. Okay, price has already give you the retracement, big retracement up to 111.4%. Now wait for the demand zone, just enter. So you can get many entries. Okay, but in that case, you need to make sure that, okay, where should be your exit point? Where is your target point? Suppose if you enter here, you have already lost 50% of your profit. Okay, today I switched, the system might be after 9:50. So I saw that, okay, the trade has already gone. So I didn't enter in the whole day. Okay, you don't need to trade every day. I'm not following, but I'm just suggesting you don't need to follow every day. Okay, so I think we have covered everything. Change in the state of smart money, SMT, risk manager, target on. Okay, online course. That is my old course. Okay, there is a question, I think. Hello, Shubh, how long is left? Ali bhai? Yes, 8 p.m. is there. I'm just give me a minute. Okay, so
Sure, sure.
I can put it in the, I think, group. Okay, this is the course. I can show you the course content. Okay. Okay, what is included in the course content? I took this course, I think, in June 2023, last year, more than 1 year ago. Okay, from the beginners. Okay, I started from the candlesticks. What are the candlesticks, opening, closing, whatever? Everyone, I think 90% of the people, you know that, okay, what is the candlestick? Okay, then I basically, that was the pure price action course. Technical analysis I did. Okay, there are so many things. If you will go, that is, I'm not promoting, I'm not asking you to take this course, but if you want to learn a little bit from the basics to some advanced level, you can take the course. I have already shared the link. That cost is, don't tell me that, okay, why you are asking the money. That basically I'm paying some of the to these whatever the Thinkific, and I spent a lot of time during that course. That course was almost 3 months. We took that course. We we were taking the classes only on weekends. Almost initially, I asked that, okay, the class will be of 2 hours, but we were taking the class of 4 or 5 hours. So we completed that course in 12 classes, so almost 40-45. So the total course duration is 45 hours. Okay, and the cost is $100 only. Okay, one-time fees. You don't need to pay anything other than miss every month. You just need to pay once in a month. So I just started from the basics. Okay, then we advanced to, like, okay, I don't have the time, otherwise I can also tell you that, okay, you can also look for the momentum stocks, like the stocks which runs every day. So like this stock, how you can trade this one.
Shoaib,
Yes.
someone is asking for the link in a chat, so maybe you can post it here.
Okay, thanks. I don't think it is, I'm not able to. Oh, only host and okay. I have shared in the group, I think. Or Alibhai, can you?
You can
Share me
post.
the link. Share me the link on WhatsApp. I'll put it here,
Okay.
or just send it to me 1-to-1, and I'll put it in the chat.
Fine. Okay. So another thing,
I think he already put it under Shahid Trading Expert. He put the
yes,
link
boss.
over there.
Yes, boss. Okay, so I am planning from January or Feb. I'm planning another session, but that will be the last time I think the price was a little bit high, but it was $1,000. But this time it will be only $400 for the complete course. I will take it to the 12 classes, 10 or 12 classes, and every class will be around 3 to 4 hours on the weekend only, on Friday. So you can contact me if you will be interested in, might be I will start, or might be I will not start. Okay, I'm not sure. In January or Feb. Okay, so any question, guys? Let me know. Can you send free TradingView link? Oh, TradingView. Yeah, there is an offer for TradingView because today they for the premium they have, I think, 70% off. Don't need to go with the premium because I usually do the coding. That's why I have premium plan. Okay. They have 70% off. Only 6 hours have been left. Okay. So, but you can take this essential one if you want to take. And
Yeah, but if you don't want to pay, you can use the free one as well.
yeah,
So,
free one, but it will the live data, you cannot get the live data. You need to buy the
yeah.
live. It will be, I think, 10 minutes or 15 minutes delayed. Okay. And
So Zainbhai, do you trade directly on TradingView or it's just for charting and you use other brokers or you have integrated?
no, I
your
use
broker?
basically my main broker is AMP Futures. AMP Futures, and their commission is $4.2 for in and out for futures. Okay, and beside that, I sometimes nowadays I'm using, some of my friends knows that I'm using this prop firms. Just there is another purpose. So prop firms are basically, there are different firms like Apex, Take Profit Trader. So I'm using AMP. And just to show you, okay, here is trading. Okay, right here. Okay,
Shwebhai,
so
now you're taking my time.
yeah.
Because then we have 10, we have to finish at 10.
Yeah. Oh, give me a second. Give me a second. Just one minute. Okay. So I think right now I am at 50th account, 50, because I usually what I do, my second son, he also likes trading. So I complete their evolution, like 50, 50K and 250. He has blown up 1, 2, 3, 4, 5, 6, 7. There are 7 evolution. That means the PA accounts. He has blown 6 accounts. I am trading only on 1 account right now. Okay.
Which company are you using for the
This is Apex, Salibhai.
Apex?
This is Apex. So I got 250K.
Right, very good.
And
250K or 250K too?
2 times 250K. In
Half a
250K,
million.
you need to go with the 15,000 profit, and you
Right.
can lose $6,500.
Sure.
And in
I think
50,000,
Apex has
Apex.
an offer going on these days.
Yeah, Shoaib, I believe you also got the
Guys,
what
we
you
need
call
to,
it, payout.
guys,
Yeah, this is
Yeah.
payout.
guys, we need to now.
Yeah, this
Shoaib,
is payout. So,
very
but yeah, but the thing is this, that okay, if you don't want to lose much, okay, because in one day I lost $10,000. Okay, I started at 9:30 and 12 o'clock. मैंने हाथ जोड़ लिए थे, $10,000 that was gone. Okay, so I don't want that any one of you should do like this. Okay, I always say that this is not your money, this is your family money. Okay, this might be, there are some people who needs your money. Okay, so just go with the prop firms. If you, because in the prop firm, how much you need to spend might be maximum $40 or $50. You can have the leverage to lose, not the leverage, basically you can lose $3,000 against $40 or $50, or you can, in the same amount of $50, you can have this, suppose this one 250K. Okay, in 250K, you need to take you can, if you want to, for the payout or the PA account, you need to show them that you can earn $15,000 and you have the capacity to lose $6,500. Okay, but don't invest your money. Because if you really will lose $6,500, you are done. You are done for maybe for the next 6 months, of maybe for the next 3 months. You will not able to trade. Even if you lose one day, if you lose your real money, $3,000, $4,000, I think if you see the trade, you see the setup, you will not be able to take the trade, because you will not be able to press the button. Okay, I'm just where is that one? Okay, give me a second. Did I miss anything? Okay, Friday deal. Yeah, Black Friday basically. So we have the TradingView has the deal, but if you want to, yeah, if you want to buy, you can buy the deal, their offer. Usually, even on the I think the expensive one, you can save maybe $300, $400, $500.
They have 3 options. So which one should we book as a beginner?
Sorry?
They have 3 options, like 50%, 75%, and something
Just
else.
go with the essential one. Just go with the essential one. Don't need to buy because I do the coding. That's why what I do basically in coding, I see, okay, this indicator is good, the other one is good. So I mix it, I change some codes, and that's all. Alibhai knows.
Thank you.
Okay. So in future, if anyone have the question like that, if you how you can trade the momentum stocks, that is really good. In a day, you can earn good healthy amount of money. Okay, with the same setup, because I only have one setup. Okay, I don't want to go setup and miss. Today I don't want to use one setup and the next day other setup. No indicator, nothing. Okay, just go with the setup and take the profit. If you don't find the setup, don't trade. Okay, now if you see, this is almost lunch break. But what happened if you just Alibhai, this is your demand zone, valid demand zone. Price didn't come in this demand zone. Price retraced back from the fair value gap. Okay, so don't trade. Okay. But like what happened Tesla yesterday. Okay, first of all, you need to see that, okay, where is the valid demand zone? The price broke this structure. Where is the valid demand zone? This is your valid demand zone. No, because price is rejecting. Okay, so this is not the valid demand zone. Go in 30 seconds. Now mark the demand zone. Okay, so I'm just marking the whole. This is basically this candle, the middle one is, I'm marking this. Okay, just for the safe side, I don't want to miss the trade. Okay, even I missed the trade, just kiss and went up. Why? Because there was another demand zone here. This was another market shift. Okay, why the price retraced back from here? If you will mark the Fibonacci, it came inside the discounted zone below 50%. It liquidated all these stop losses. Okay. Even if you go with the CISD, so CISD is the continuous one candle. Okay, means one candle or continuous candle. Okay, so this is the CISD level. Just go, and I told you that you need to look for the fair value gap and the demand zone in this level. So you have the fair value gap here. This is your FVG. And where is the demand zone? This candle created the push. So you can take one trade here. Okay, what is your target? Internal target. Okay, just go. So I told you that, okay, in the last level, means before the highest high, you have another higher high. Okay, and the body of that higher high. Okay, price actually didn't. I'm just looking this one, because if I will go with the trade, I take my profit here. I don't want to wait up to here. Okay, this is also good setup. If you see, if you enter even on the top of fair value gap, there should be no trade without the stop loss. You don't need to. If you don't know your loss, how you are entering in the trade? If you are going out from the home, you should know that, okay, the brakes are working well, everything is good. Because DCA, if you are doing the if you buy at $10, the market came down to $8, you buy more, then you buy at $5, then the price went to 0.001 cents. What you will do? No trade without any stop loss. Don't trade.
Shweb,
yes, Alibhai. Okay, thank you.
Finish it. Yeah, please.
Yes,
You need
I
to
finished.
finish it in
Okay,
1 minute.
thank you, guys. The recording is on, Alibhai. I need something.
And
okay.
then who's going to take the admin job while I'm
Okay, we can give it to Munir. Munir, will you stay? Munir or
Yeah, I can.
Shahid is there?
No, Shahid is. I don't think he's there. There are two
Munir,
Shahids.
will you stay till?
I can
till
help
the
you,
end?
Oliver.
Yeah, sure. Are you going to stay there, right? For
Yeah.
Okay,
I
one
will.
second. Let me give it to
So,
you.
one more thing, Alibhai, do you want to stop me here and again start the recording? for your separate
No,
session?
no, no. I will just start the recording, guys. Basically, get your tea and coffee. I'll take only 3 minutes to start the session.
Okay, so I can stop the recording. Okay.
Sure, sure. Thank you.
Okay. Thank you, guys. Take care.
Thank you very much, Shoaib, for your.
Thank
Someone
you,
asked-
Shoaib. Thank you.
Will
Thanks,
you
Shoaib.
able to share this recording?
Yeah, yeah, we will share the recording.
हाँ शुभ, एक रिकॉर्डिंग यहाँ पर रोक दे, फिर दूसरी रिकॉर्डिंग कर दीजिएगा.
Okay, Shahid bhai.
The other thing is okay.